Hey, what's up, folks? Welcome back to the channel. So as promised, I'm going to do a comparison between popular stocks that are often pitched on YouTube by bigger YouTube channels versus more solid stocks that are a better alternative, in my opinion. So if you followed my channel, I tend to talk about solid large cap companies. I've talked a lot about large cap versus small cap and how even though large cap companies are more established, my belief is that they do better in the long run because small caps are risky. They're starting out, they may have great revenue, but whether they're going to sustain that or not and become profitable is always the question. So one of the internet's favorite stocks that's pitched on YouTube quite frequently is Tattooed Chef or The Chef. And we all know the channels that pitch that. I'm not going to personally go after those. I'll leave that for other channels to do. But I just want to talk about the performance of the stock itself. And the company that I picked to compare it to is Chipotle. So if you're familiar with what Tattooed Chef does, they have the healthy bowls that are in stores, and they were a decent COVID play because you could easily go, especially during the lockdowns, and get already prepared bowls in the store and cook them at home easily without much preparation, just heat them up. But the same thing was true for Chipotle, which stayed open throughout the pandemic. And you could easily go there and they have a similar, you can get the similar bowls that are relatively healthy. And so I think in terms of that, while Chipotle has become like a mega cap company, I think it's a decent comparison. So, and what I'm going to show you here is if you had bought both of these in March 2020, when the pandemic really first took off in the United States, how you would have come out. So while it is true that the chef or Tattooed Chef had a great first year or 6 months after the pandemic started, as of today, it closed at $6.79 a share. So Chipotle is a much more expensive stock. So this isn't your typical Reddit stock. I mean, you kind of have to have a little bit of money if you're going to invest in a stock like this. But what I did for comparison, I took a typical growth of $10,000 because anytime you look at a fund performance, that's often the benchmark used. And since it's in even increments, you can always, shave off a zero and get 1,000 to scale it. So just taking $10,000 if you invested in March 2020, Chipotle was trading at $654.40. So with $10,000, you would have gotten 15.28 shares. And we'll just call this 15 shares since we're not thinking fractional shares. And same with the Tattooed Chef. So at $10.29 in March 2020, if you take the $10,000 and divide it by this price, you would have bought almost 1,000 shares. So we will make this just 972. So at the high point, both of these stocks, like all stocks in this market, are down significantly. So if you look at like Chipotle, it hit a peak of almost $2,000 a share, but it's dropped to a close today of $1,272 per share, which is quite an expensive stock. Not quite Amazon's level, but it is a pretty expensive stock that not everybody can buy. But this is where I think that my channel comes into play because I like to encourage or coach people to go with more large cap companies because in the long run, and in my experience, these have done better, even though you're not catching these. But as bonus content, I'm going to show you at the end of the video, if you caught Chipotle in the early stages, how well it would have done. So, and that's the concept behind small caps is that you're catching them early in the early rapid growth stages, but it's really hit or miss because not all small cap ideas end up translating into viable long-term businesses. So, but stay tuned for that because I'm going to show you at the end. And apologies if I sound a little congested. I caught a bit of a cold on my vacation. I'm actually on the last leg of my vacation here. I actually have the kids' room here. So if you can see behind me, I know my backdrop changes quite a bit. So, but I'm back indoors. I'm not filming any outdoor stuff today. So now taking this into consideration, the value at the high point, and here we go, we'll reveal this. So here's how you would have fared. In both scenarios, you would come out better being invested in Chipotle. So if you take the 15 shares times the high price of almost 2000, 1958 to be exact, you would have 3x'd your $10,000 into 29,370. But if you held it and didn't sell back in September, whenever it hit its high, then you would still have doubled your money almost at 19,080 per share. Similarly with the chef, even at its peak, you would have come out worse than you would have if you just invested in an established company like Chipotle. You would have come out $5,000 less in this scenario if you sold at the 52-week high, which was $25.35 a share. But if you still held this today, your $10,000 would only be worth $6,599. So not great. And this is the difference between investing in a small cap company and a large cap. So you see, you would have fared much better in a company like Chipotle. Now let's go and look at some fundamentals. So here's the closing price today. Here's the aftermarket. But if you look, Chipotle originally started at about $52 a share. Actually, it was below 50 back in 2006. And if you kind of had some sense of future trends, you may have caught this one early on. I'm sure there were people that did, obviously, that became massively wealthy. And I'll show that example at the end of this video. But as you can see, this went on a significant run, and they had their issue back in like 2016. They had the scare with the bacteria or whatever it was in the bowls, which hurt their business. So you can see the stock dropped from 2015, and it dropped below $300 in 2017. So looking back, retroactively speaking, it would have been a great buy, because you see, once the Rona hit in 2020, the stock, going back to 2017, it was below 300. Then it went back up to almost 840. And then when the Rona hit, it was like dropped to 654. And then you can see how it shot up here, September, then January 21. And then, by August of 2021, it peaked out. So you can see that was that was almost tripling in value. But imagine if you got in the early days. So let's look at some fundamentals briefly. So this has really become a juggernaut in terms of revenue. You can look at 18, 19, 20. Actually, they were kind of flat in 2020 versus 2019 because of the pandemic, but it was still a great pandemic business, because it was so easy to go there during the pandemic, or get delivery and get the bowls, similar to the tattooed chef Buddha bowls or whatever they call them. Like I said, Chipotle is a fairly healthy option. But you can see here, so cost of revenue was high. Profit margin, however, did increase from 2020 to 2021. Operating expenses, operating income, you can see there was a massive increase between 2020 and 2021, and even to 2019. They almost doubled in operating income. And if you look at pre-tax, still very good, very solid. And if you go down to earnings per share almost doubled from 19 to 21, factoring out the pandemic. And then there's other shares, average shares, diluted average shares. We won't go into too much detail here, but look at projected earnings here in July. It's massively, they've beat earnings the last 4 quarters, but I don't think they're going to meet this, because this is, for some reason, this projection is way higher than where they were last quarter. So, and then let's look at the chef. So again, it closed at 679 today. it's been having a very rough year. It's been getting hammered from its 52-week high. It's just consistently, it's like a straight line down. It's projected in a year at 1267, the 1 year target estimate. So let's briefly look at the financials, and then stay tuned because I'm going to show you if you bought Chipotle in 06, how well you would have done. So revenue, and this is the thing with small cap companies, revenue is always taken into consideration because it grows so much in those early product life cycle stages of the company. But if you look, and this is what hurts so many small cap companies, cost of revenue. See, the cost of revenue consistently goes up with the revenue itself. So the gross profit, while they were barely eking out a profit here, and it actually went down from 2021 to 2020, you can see the operating expenses just ate the profit margin away. And you can see pre-tax income, they're at a negative here, negative 39,480. And I believe this is in thousands. So just scaling that. Tax provision. So see, they got hit like twice because they had their operating expenses come in and eat up the profit. And then tax provision. So they were at a massive loss. They went from profitability in 2020 to a massive loss in 2021. And in the TTM here, they're projected even lower. So yeah, expenses are just eating them up. I mean, and you can see in the earnings quarters here, they've missed the last 4 quarters. So this company is just trying to survive at this point, I would say. The projection, unlike Chipotle, the projection is actually lower for Q2 than it is for Q1. And I'm not sure why. It says August 10th. I'm not sure why second quarter takes that long. That's kind of strange. But anyway, like I said, in this series that I do, I'm going to kind of go after stocks that are pitched by bigger YouTubers. And I want to kind of be part of the solution. I want to help people that might be misguided following what different YouTubers say to invest in. I want to kind of re-guide people in a better direction. So like I say, large cap, you're going to be better off. And like I showed you, I mean, the proof is in the pudding or in the Excel sheet. You would have been much better off buying into an established large cap company. I mean, you would have 3x'd your money, which 3x is something that people expect to do in a small cap, but you would have done it in a large cap. Now, I characterized Chipotle as mega cap, but I just want to make sure I'm not saying anything inaccurate here. So I'm going to go back to the main page and just look at the market cap just to be sure, because I'm just going by the stock price. So let's go back to Chipotle real quick. Yeah, it's not mega cap by market cap. It's 35.6 billion, but the stock price is very high, being, $1,272. So now let's look at what I had said earlier in the video. So if you put $10,000 into Chipotle in August 2006, you would have had 201.6 shares. We'll make that an even 201, or we'll just make it an even 200. And then, so at the peak, here it comes. If you sold this at the peak, look at that. So the number is so big, we have to go even further. Almost $400,000 in, what is that, 17 years? 16. Yeah, 16 years. So that's really good. 16, that's 24,000 per year. But just say worst case scenario, if you were still holding it now, so we'll just go down one cell, you'd still have a tremendous amount of money. So if you had caught a company like this, and then just say, forget 2006, but just say you bought it after the health scare that they had in 2016, say you got it for like 300 a share in 2017. So, because like, I wish I had got into this back then, because I knew they were going to recover, and I didn't see Chipotle going anywhere. If anything, they've grown massively since then. So just say 300 shares. The heck is that? Formatting issue. All right, forget that. 33 shares. So you would have still 4x your money. So, like I say, in a solid company that you've had time to really vet, you've seen the business model, you've been in, you've eaten there. I mean, it's been established like 10 years before this point here when it was down to 300, you would still 4x your money. And that's why I think large cap companies are a much better investment. And again, this isn't advice. This is just my opinion, edutainment, as I say. But the proof is in the pudding. The numbers are right here. You would have done better if you got into a company like Chipotle versus the chef. So if you enjoyed that, please remember to like, comment, and subscribe. And I'm gonna hit all the stocks that are kind of in the same bucket. Honest. I've already hammered VGFC, or very garbage food company, but I'm gonna hit them all. So stay tuned. I'm gonna probably be talking a lot about these because they're talked about so much online as it is. So stay tuned for that, and have a good evening. Thanks so much for watching. Take care.